Welcome back, YouTube family. Today, we're diving into the world of stocks and finance with a spotlight on Williams-Sonoma. If you're into home furnishings or just love a good investment story, this one's for you. Stick around because we're about to break down some mind-blowing numbers and metrics that might just make you reconsider your next big stock move. First up, let's talk about the price-to-earnings ratio. The PE ratio for Williams-Sonoma over the trailing 12 months is 17.66. This is quite a bit higher than its average PE of 13.48 over the last 5 years. What's the future looking like? Well, the forward PE is sitting at 17.44. Not much of a drop, huh? This tells us that investors are expecting some steady performance from WSM. Now, if you're wondering why those PE ratios are high, the PG ratio might just have the answer. The PG ratio stands at 1.73, indicating strong growth prospects. This isn't just any company, we're talking about one with substantial growth on the horizon. The higher PE is justified because the growth is expected to keep chugging along. Investors are optimistic, and for good reason. Next up, insider ownership. At 3.8%, the people running the show have skin in the game. They believe in the company's future enough to put their own money on the line. Always a good sign, right? Now, let's look at some juicy returns. Williams-Sonoma boasts a return on equity of 57.61%. That's huge. It means the company is making killer profits relative to its equity. The return on assets is an impressive 22%, and the return on invested capital is 36.5%. These metrics scream efficiency and profitability. Williams-Sonoma's EPS is a solid 16.29. Looking ahead, analysts expect an EPS growth rate of 10% over the next 5 years. This company has shown a very positive evolution in EPS over the last 9 years, with a compound annual growth rate of 19.83%. Consistent growth like this is what investors love to see. When it comes to free cash flow, WSM is killing it with a compound annual growth rate of 25.74% over the past decade. This positive evolution in free cash flow per share is a testament to the company's strong operational efficiency and ability to generate cash. Let's talk about dividends. Williams-Sonoma offers a dividend yield of 1.49%, with a solid 11.76% dividend growth rate over the last 10 years. For those of you looking for income and growth, this is music to your ears. Operating margin is at 17.91% and the profit margin is 13.83%. These margins indicate that Williams-Sonoma is not just making money, but making it efficiently. Over the past 8 years, WSM has shown positive evolution in both revenue and earnings. This has been reflected in their market price, leading to a higher total return compared to the Vanguard S&P 500 ETF, VOO, over the last 5 years. That's some serious outperformance. Williams-Sonoma's debt situation looks manageable with a debt/EBITDA ratio of 0.94 and debt/free cash flow ratio of 1.00. This means they're not overleveraged and are keeping their debt in check relative to their earnings and cash flow. With a market cap of $18.51 billion, WSM is a heavyweight in the home furnishings industry. Over the last 52 weeks, the average price return is a staggering 152.04%. That's a roller coaster ride you'd want to be on. Finally, analysts are predicting the price to hit $295.05 in the next 12 months, which represents a modest upside of 2.52% from the current price of $287.81. However, based on our analysis, the fair value is closer to $284.35, suggesting that the stock is pretty fairly valued right now. So there you have it, folks. Williams-Sonoma is a company with strong financials, consistent growth, and promising prospects. Whether you're looking for dividends, growth, or just a solid investment, WSM seems to tick all the boxes. If you enjoyed this deep dive, smash that like button, subscribe for more content, and drop a comment on which stock we should analyze next. Until next time, happy investing.